Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. In today's video, we're going to be looking at part 2 of the stock to flow series when it comes to deducing the upside deviations that we tend to see in Bitcoin's price beyond the stock to flow line, which is the brown line right over here. The stock to flow model, of course, quantifies scarcity in Bitcoin's price action and, of course, is influenced by the Bitcoin halving events. These are the upside deviations that we covered in the previous video, part 1 of the stock to flow series. Today, we're going to be focusing on these 3 deviations in part 2. So let's dive into this update. This is a better picture showcasing what we're going to be doing today. This was part 1 of the series, which we covered recently, and this is part 2 of the series where we'll be covering these 3 upside deviations. And just to give you guys a overview, this was an upside deviation of 1,157%. This was an upside deviation of 477%, and this was an upside deviation of 554%. So what kind of deviations do we see in 4 and 5, and what could we potentially expect from deviation 6, which is currently going on now? In fact, there is no deviation. We're seeing price perfectly follow the stock to flow model, in fact. So let's dive into stock to flow deviation number 4, which was the Bitcoin bull market peak in December 2017, right over here. Basically speaking, after breaking past the stock to flow line right over here, mid-October 2017 at $5,000, we saw Bitcoin deviate towards $20,000 right over here. How much of a deviation was that? It was a deviation of 257% right over here. What a fantastic run-up. But still, compared to the previous upside deviations of 1,157%, 450%, I believe, and 550%, 250% is still a smaller deviation compared to what we've seen in the past. So we have to start thinking about, well, are these deviations getting smaller in magnitude? Is there a diminishing return in terms of when we breach the stock to flow line and then how much we deviate from it? That's something to really think about going forward. But what I want to focus on here is the 5th stock to flow upside deviation in June 2019. And you can actually see this was the weakest upside deviation from the stock to flow line compared to this one, here and here. And I want to talk to you guys about why that is, because mid-May 2019, we saw the stock to flow line be at around $7,000, and then we deviate towards the upside by June for a 13,900, 12,800 price point. So not a very big deviation. In fact, 76% beyond the stock to flow line. Not really a substantial deviation, to be honest. 76%? Well, we have to understand why that happened. And to understand why that happened is to look at the Bitcoin halving events. Bitcoin halving number 1 being the blue vertical line, Bitcoin number 2 and 3 being the vertical lines as well. So there's this upside deviation right over here, 1,000%, over 1,000%. Then we have halving number 1. And of course, the Bitcoin halving impacts scarcity. And of course, the stock to flow model is a great visual representation of quantifying that scarcity. So in the months after the halving, you'll see Bitcoin's price action appreciate due to a newfound scarcity implemented and impacted caused by the Bitcoin halving. So you can see how Bitcoin's price action grows along with the stock to flow line, because the stock to flow line is showcasing how this increasing scarcity in Bitcoin is occurring and price is growing as a result of that new scarcity. So you're seeing these Bitcoin rallies as a result of that scarcity, and the stock to flow line is growing in tandem with that price action. And before the halving event over here, you don't really see much interesting price action for Bitcoin. But after the halving, you see tremendous increase and appreciation in Bitcoin's price action, because we're seeing not only the stock to flow increase, but also the price action of Bitcoin trace the stock to flow line and then deviate from the stock to flow line later on in the cycle. So the Bitcoin halving is a very important reference point for price in instilling a newfound scarcity in the Bitcoin protocol And Bitcoin's price action follows and adjusts to this newfound scarcity, and so does the stock to flow line as it increases. So we see the stock to flow line and Bitcoin's price action increase in tandem just to compensate and accommodate a newfound scarcity in Bitcoin, in the Bitcoin protocol. And naturally, we don't really see much interesting price action in Bitcoin's price prior to the halving, just like we didn't see it here for instance, and even here as well prior to halving 1. And the reason for this deviation beyond the stock to flow line over here, well, this was before the halving. And we never really see much interesting price action before the halving events. And we've seen this throughout history. It's only after the halving that we see significant price deviations. After the halving that we see significant price deviations. So this upside deviation here is a bit of an outlier, an anomaly when it comes to the upside deviations throughout time, because this one occurred prior to the halving. And it's this upside deviation that wasn't caused by a newfound scarcity, because the Bitcoin halving event never took place. It didn't take place yet. So this was arguably just normal price action where we just meander around the stock to flow line, much like we saw deviation below this stock to flow line, then upside deviation a bit here, but generally just meandering and following the stock to flow line. So this is essentially Bitcoin's way of deviating below and above briefly, but generally trend following the stock to flow line until the halving event actually occurs and that newfound scarcity once again occurs as well. The Bitcoin protocol is altered fundamentally by the Bitcoin halving event and price appreciates and the stock to flow line climbs. So really important to bear this in mind, that this is a deviation that wasn't caused by the Bitcoin halving event. This was just normal volatility, normal trend following price action in the context of the stock to flow line. So in the context of the stock to flow line, this was nothing out of the ordinary, really, when it comes to these sort of deviations. So this deviation isn't an important deviation because it didn't occur after the Bitcoin halving event. Which is why it's important to emphasize that the upside deviations that occur beyond the stock to flow line, the most significant ones are the ones that occur after the halving event, right over here, and over here. Really important distinction to make there, because it's not just the upside deviations in a vacuum, it's the upside deviations later on after the halving. And I just talk about a few interesting things in this article, so feel free to check out the link in the description down below to read part 2 of the stock to flow series. I'm not going to cover the whole newsletter in today's video, but I want to talk to you guys very briefly about what we need to pay attention to when considering the 6th upside deviation, which is still yet to be decided. We are perfectly following the stock to flow line. For the very first time in history, we've never really been perfectly following the stock to flow line like Bitcoin's price is following right now. Perfect tracing of the stock to flow line by Bitcoin's price action, stock to flow line actually outlining the trajectory for Bitcoin's future price action perfectly so far. Something to get excited about, but we are just trend following this stock to flow line at the moment. So the upside deviation that occurs after the halving hasn't actually happened. The upside deviation that tends to occur to precede a bull market top, like we see over here and over here and over here, that upside deviation hasn't even happened yet, which only showcases that we're still early on in the cycle. Because at the moment, we're just trend following, we're still trend following the stock to flow line. Nothing really is happening at the moment. The stock to flow line is increasing, and so is Bitcoin's price action, but we're not in the euphoric stage of the market cycle at the moment. So still just trend following the stock to flow line, and still early in the current market cycle because we haven't seen a deviation yet. But the thing to bear in mind later on is that the stock to flow line is going to stop increasing and it's actually going to level out for the next few years. So once this stock to flow line levels out, we're probably going to see Bitcoin's price outpace the stock to flow line and deviate towards the upside. So the fact that we haven't seen Bitcoin's price deviate from the stock to flow line just yet is in part because the stock to flow line is still accommodating and trying to compensate and adapt to the Bitcoin halving 3, which occurred in May 2020. Both price and the stock to flow line are trying to adapt to that newfound scarcity. But once the stock to flow has fully adapted and leveled out, Bitcoin's price is going to upside deviate. And that's something to get excited about because we haven't seen a deviation yet in this cycle. So the two important questions to ask at this point is, when could Bitcoin's price deviate beyond the stock to flow line, and where could Bitcoin's price deviate towards? And that's going to be the two exclusive questions that I'm going to be addressing in part 3 of the Stock to Flow series, which will be exclusive for subscribers of the Rekt Capital newsletter. So feel free to sign up for part 3, which is coming very soon. Click in the link in the description down below if you want to read the exclusive. I can't wait to produce this content for you guys, so hope to see you guys in there. But that's about it for today's video. If you like this video, feel free to click like and of course subscribe to the YouTube channel for more videos like this in the future. I'm Rekt Capital and I'll speak to you in the next video. Speak to you soon.